calc with revenues. So we total the expenses, and that works out to 104. So the bottom of our statement of operations is excess of revenue over expenses. So revenue minus expenses is going to be how much? 0. This is unique to this situation, whether your forfeitures were higher or lower, whatever, the way the question's set up, it'll always work out to 0, okay? Don't expect to see this again, and I really don't like it when they do things like that, because then you're just never sure as a student, so, or as a prof for that matter, did they make a mistake? But yeah, so this happens to be 0, just because of the way the government grant, it's pretty much their whole thing, their whole operations. Any questions on that? Yes?
If there is a shortage, how would you go about it?
Oh, you just put excessive expenses over revenue then. Yeah, perfect, you guys. Anything else? Okay, now let's go to part C. I'm going to put it on another page, just so I don't run out of room. Anyone still need this? Okay, part C. Now, they were very, very specific in what they asked. They just asked for liabilities because liabilities are generally, if you're in a stressful situation doing an exam, assets we can touch and understand, liabilities mess us up. So let's go through these and try and make sense of them. So first we want the accrued liabilities, or they could be accounts payable because they're operational. So how much are accrued liabilities and what are they made of? Salaries and hang on to those deposits. We'll talk about that separately, so you're not wrong. These are specifically, just because of their wording, and see, sometimes it's not clear. Accrued liabilities, then deposits is the second one, so they're trying to distinguish it there. I would have called them payables because salaries and benefits and utilities would both be recorded as payables. Okay, so we're dealing with salaries and benefits plus utilities. So that's 8,000 plus 6,000 equals 14,000. So that one's pretty straightforward. Okay, now the second one they wanted us to do is deposits from course participants. Am I writing big enough, you guys? That's a way back. Okay. So, I personally would call it deferred deposits or something like that. But again, you guys, if you're ever involved with not-for-profits, especially smaller ones or ones that are big but have grown from small, you'll see very descriptive account names, which is good, right? Okay, so I'll put the information up. And go ahead and calculate it. It should just take you a few seconds, a few minutes, a minute. Good Lord. $60 or $6? Okay, I've got 6. Anyone else?
I also got 6 too.
Okay.
Is it just from the 30? I thought the 50 that also contained the, oh no, the return it back to them?
Yes. Yes.
Okay, because I did 80 times.
That's exactly,
Okay,
yep.
so it's-
Good, excellent. Okay, so, and of course you guys can do it quickly like that. I'm just doing it so when you look at these notes later, you can understand them. So we received $200 from 90 people, right? Can't even read my own writing. Now, how many did we refund because they finished the course? 50 people. And obviously, you guys, this is a math question. You could just do all in one, but I'm just spelling it out for you. So that's -10 we're taking away from there. And what else is tied with that? The forfeitures for people that dropped out. And we already calculated it as 2,000, or, I mean, you can calculate it again, 200 times 10 if you want. And just remind me again why this is a liability. Sorry? They're not finished, so we might owe them that money back. It's a liability because we may, owe them their deposit back. Now, does that one make sense? Because that's always a point of contention with this question. Okay. Finally, the third thing they want is deferred contributions. So it's contributions we've received. Sorry about my writing. But is not revenue. Until it's matched to expenses. That could be a contribution, say for a grant, like in the example in the notes, where we got the United Way grant in one year, but it couldn't be used till next year. Same idea here, okay? And in this case, it's capital equipment. But it doesn't have to be. You can also have it like that United Way grant. I'll just put that here, Sue, if you're looking at it. So we don't consider our revenue earned until we use the equipment in this case. We received $320,000. And what have we already put away to revenue? The $80,000, which was the amortization expense. So just so you know, you guys, it looks like this is recording, so it's going to be broken into pieces, and it might be, I don't know, maybe this is a better one than I have at home, but I'm going to upload these, scan them and upload them, and also put the video up if it works. Looks like it's good. Okay, so if you need to refer back, you can. Any questions on 12.7? So this was one of the ones in your Connect assignment in chapter 12. I suggest when you're doing it, first review this, then try doing it without your notes, right? Because then you've got the learning process done. Questions? Okay. Now, you'll have to use your phone because this isn't in your textbook or your computer or whatever you've got with you. One of the multiple choice on Connect, it's actually number 7. I think it is, at least it's on mine. Okay, so this one isn't bad. Just take a second, and if you can read through it or find it on your phone. And again, you guys, I'll let you know in advance next week. I don't know why I didn't. So this is just asking you to pick the right number, which we already narrowed it because I pulled it from mine. They always tell us the answers just in case we don't know. I'm going to not just do the calculation, even do the calculation. I want to do the entries and post them into the capital fund, just so you can see how the balance sheet and the income statement kind of line up and how it fits together. So, we're going to start off by doing the entries. Now, we know it says restricted fund and capital fund. So we're assuming this restricted fund is the capital, otherwise why would they tell us that? So all these entries are in the capital fund. Okay. They said there was a balance in the capital fund already of, well, $8,400. So I'm just going to do the entry to put it there. Okay, so remember it's the capital fund. Now, in reality, oh, you heard this on the thing. I keep forgetting that I said all half of this on the video. Okay, so we're going to debit cash for $8,400. What would I be crediting? If it's going directly into a capital fund, do we have to worry about deferred revenue? Nope. So it's some kind of revenue account. So revenue, and in this case, we don't know what it's from. I don't think it told us, did they? So let's say it's some kind of grant. Okay, so that's the cash getting there. Now, what's the only thing we did? We purchase. It was capital fund all the way down. So our purchase, we debited equipment and credited cash for $8,000. Okay, but I know this is restricted fund, so how come we didn't have the transfers like we did in the notes? You had a transfer about equipment and move it from operating to capital. It was money that was in the fund already. Okay? When you do that, you can just use it. Everybody good? Okay. So then, what do we do at the end of the year? Amortize. So, debit amortization expense, credit accumulated amortization. For how much? Oh, sorry, you guys. For how much? I don't think I can get all that in the. Oh, yeah, we're good. Anyone? Yeah. 1,500, perfect. So it's the 8,000 cost, no residual value by 4, but you have to, what's the word? Prorate it for the 9/12. So you guys, in terms of amortization calculations, that's about as hard as it's going to get, or they can make it. So they do a lot of prorating. Okay, so just watch for that. Okay, now what I want to see over here is the actual capital fund, and it's going to be capital fund statements. So we have the statement of financial position, which we all know is the balance sheet, thanks to IFRS changing it. And then down here, we're going to have the statement of operations, which is just like the income statement. You guys have a lot to remember already, so if you revert back to the old language from profit enterprises, that's okay. Okay. So let's put our cash to start with. So basically, we're just posting these. Okay? Cash went in, so it went up by 8,400. Check. And then it went down by 8,000. Check. And that gives you $400. Everybody okay with that? Okay. Then we've got equipment. Oh, I should have put you guys above the cash. I should have put assets. I'm sorry about that. So above the cash, just put assets. Oh yeah, and we'll never expect you to do a classified balance sheet in this course or anything, you guys. So just, there's hard enough stuff to learn. Okay, then we've got equipment. And what's special about equipment is we amortized it. So we've got the 8,000 minus the 1,500 of accumulated amortization, which leaves us with 6,500. And as you can see, I don't care about the columns because I wasn't consistent. Thus, with total assets of 6,900. Questions? Now we go to the liabilities, and it's not equity. What is it instead of equity? It starts with an F for the restricted fund. The first word is fund. Fund balance. So we're going to have liabilities, and we're going to have the fund balance, and then we're going to have total liabilities and fund balance. And just make a little note for yourself, fund balance is like equity. Okay, oops, I forgot to check off our equipment. Equipment and accumulated amortization. So, what we have left right now is revenues and expenses. So, they're going to go down here to our income statement. So, we have revenues of $8,400, an amortization expense of $1,500. So the difference is $6,900. And that's excess of revenue over expenses. Questions so far? Okay, so now reach back in your minds and tell me what a statement of retained earnings looks like. Well, you start with the beginning balance, right? Then what? I know, a long time ago. You add something to it, or subtract. What goes into retained earnings? What gets closed? Net income. Net income goes in. So if you've got a positive amount, it's added to retained earnings. Beginning plus net income, what do we subtract? Starts with a D. Dividends. I knew you guys knew. Minus the dividends gives you the ending balance, right? Well, we've got to do the same kind of thing with the fund balance. So our fund balance, because this is a brand new organization, started at 0. What do we add to it? The excess of revenue over expenses. If it was a negative amount, of course, we'd subtract. Are there dividends? No, because dividends are amounts that are distributed to owners. Non-profits don't have owners. Biggest difference. So this goes up in the fund balance place. So I'll just do a little thing here for, let's call it statement of changes in fund balance. You guys know the little, oh my God, delta, right? It's been a long time. It's changes. Statement of changes in fund balance. You would start with the beginning. And in this case, it's 0. You would add excess, they've got to come up with a short name for that, of revenue over expenses, which in this case we calculated was $6,900. There's no dividends, make a little note for yourself. Because sometimes you guys, they like to throw these things in the question and they say, well, we paid the board members amounts to, travel and that kind of stuff. Because the larger companies do, because they've got people from all over. And so people will try and put it as dividends. It's not. So we end up with $6,900 with ending fund balance. That $6,900 goes all the way up here to become $6,900. And we said there were 0 liabilities. So our total liabilities and fund balance is $6,900, and they're balanced. So that's a very simple one to help you understand the statements that you're going to do from the question you guys asked earlier in the text. Now, you will see with a fund balance, I guess up there, often there's restricted and unrestricted funds, and they'll break it into the 2 pieces. Okay? So all they've done is separate it into 2, but that it all went up there. Okay? Questions on that? Okay. So very similar, you guys, in 311, you did this kind of stuff all the time. It's just, it looks a little different now because it's not for profit. Okay, that's that one. Any questions on it, you guys? Okay, now I want to do problem 12-2, which is actually one of your suggested problems. The last one was Connect, number 7, I think, of the multiple choice. And don't forget, you guys, in Connect, and let me know if it's in, not for the multiple choice, which is why they're separated, but for the problems, I should have your work enabled. Is it there, you guys? So if you ever find it isn't on a chapter, then let me know. But I think it will help your learning process that way than redoing. Okay, so we've got a minor hockey associations. This is both of these, or all three, well, the first one and this one are very representative. Established January 1st, year 5, so you know we're dealing with year 5. Blah, blah, support. It's got support of the provincial government, also local business people, and many individuals. So, does it mean it's a government organization? No, because its funding isn't solely from a government level. They built an indoor hockey arena, established an endowment fund, and the endowment fund is for paying travel costs. So that's something to remember. And again, this time we've got the cash inflows and outflows, and we've got each of the operating capital and endowment, and I believe it's from the beginning of the year. Yes. So it continues below with the expenses, and it tells you the cash at the end of the year, which is great if we were doing cash flow statement, but we're not, so that's why we have to play around with this. Now, just before we go to additional information, it's always good to look at the required, especially on an exam, so that when you read through the question the first time, you're looking for specific things. So on the required, they want a statement of financial position and a statement of operations for each of the 3 funds and at year end. And then part B, which is kind of interesting, 500 children are registered. What's the average cost per registered child? Okay? So we're not going to have time to go through this whole thing, but I want to highlight the problem spots that raise questions. And they always come up in the additional information. Okay, so look at additional information. So it was completed late August, year 5, official opening end of August, September. It's going to have a 40-year life, no residual value. If anything about residual value, just assume it's 0. Okay, so we're looking at year 5. We've got an arena. It's a capital item. Are we going to amortize it for the whole year? No, we're going to start on August 31st. So prorate amortization. Again, watch this. They do this in almost every single question. Now, a long time, well, it doesn't matter. Someone donated the land on which the arena was built. It was valued at $70,000. The association gave a donation receipt to the donor. Okay. So, is land amortized? No. So, just a reminder, don't amortize. So I just want to see. Okay. Now, former resident, donated ice making machines and ice cleaning equipment. Until this, until this morning when I was reading it in my first class, I thought it was ice cream making equipment. And I imagined a session. Anyway, but this morning it clued in when I said it out loud. Okay, so fantastic. Receipt was